It's not about the money, it's about making a difference. So if you're passionate about the industry that you're in and you're passionate about seeing change, then probably look at becoming a proprietary limited company, because you can impact the industry more. You can change the industry more by being an actual company itself rather than just being a sole trader. Because there's only so much you can do by yourself.
Exactly.
But the world is your oyster when you can hire people.
G'day guys, welcome back to another episode of Uneducated Entrepreneurs. My name's Dan and we've got Pete on again this week. If you haven't watched last week's episode, go check it out, be above Pete's head. And we have decided to mix things up. We'll be now doing episode releases every 2 weeks, so once a fortnight. Just because Pete's business is getting busier, my stuff is getting busier, / I just need more time. And so we're going to do it every 2 weeks, and we will potentially throw in a bonus episode in the off weeks if we've got pressing news to share.
If exciting stuff happens.
Yeah, pretty much. That's basically it. Like if there's $1 million grant for every business owner, that we'd definitely be covering that like straight away. How good would that be?
Yes.
So today we are going to be covering sole trader versus company. So Pty LTD Company. What are the pros? What are the cons? When should you switch from a sole trader to a company? And our personal opinions and ideas. Before we get started, we are by no means qualified tax agents to recommend any sort of action on your behalf. So don't take our word and go and start up a company because it's like, oh, these guys said that I should do it. Don't do that. This is just our opinion. So
our experiences too. So I'm out of the two of us, I'm the other one with a Pty LTD proprietary limited company. Dan is still a sole trader. I have been a sole trader before in the past. So this is just my personal experiences within it. What we need to make very, very clear is everybody's circumstances are very individualized, and it's very important to remember that we're not uneducated. We're uneducated.
Exactly.
Not qualified.
As the name says, we're uneducated.
This is just
cool.
So it being our personal experiences, this is something we're just going to give advice on. We'll have a chat, and just my experience is different from Dan's experience because Dan's had a whole life of being a sole trader, and I only spent a couple of years doing sole trader. So it'll be an interesting discussion, and it'll be hopefully give you guys some more ideas on how to move forward, what to do, which way to go about your business development, your personal business development, your personal life growth, all of that sort of thing. We can maybe sneak in a couple of experiences we've had with, say, our tax accountants in regards to the difference between sole trader and business, because obviously it gets a lot more complicated once you become a proprietary limited company.
Yes.
Sole trader is a lot easier tax-wise.
To a certain degree.
And you start paying. Yeah, well, it is because it's not as complicated. You don't have as many legalities. You don't have as many hoops to jump through. You don't have directors and owners and a whole range of different things. You've got just yourself and your personal assets, because that's one of the things we'll discuss. Did you want to kick us off, Dan?
Yeah, okay. So with sole trading, obviously all you need to be a sole trader is an ABN, which you can get for free. We can link way to get down to there. I think we've talked about this briefly in one of our early episodes. However, with an ABN, you can pretty much do everything you need to do as a sole trader. And with that, you're your own boss. You're also not having to, manage staff as Pete has to do, which would not be ideal.
You can though have stuff as a sole trader.
Yeah, that's not saying it's easy.
You're able to have.
You go.
Yeah, I think you can have up to 2 staff or something. I don't know the actual number, but I remember when I was a sole trader, I was able to hire people as a sole trader, which is interesting because it kind of defeats the thing sole trader.
Yes, that is true.
The name itself. But it's not sustainable because all of a sudden you're having to pay their taxes and their supers and all of that sort of thing. So you have to be really careful when it comes to all of that.
Yeah. Like the way I look at it, there's a lot of pros and a lot of cons for both things. Like if you're just starting out in business, because I know Pete was saying, we were talking earlier on the phone, that pretty much within a month or two of starting his business with Avast support, he was earning over $100,000 as a sole, which means he's getting taxed over 40 or almost 45%, roughly. Correct?
Yeah, because when you start a business, is you go into a sole trader, you're probably still working somewhere else. This is typically how people do it.
Yeah.
Because when you start out a business, you're not going to get enough income in order for it to be sustainable within your life or your own circumstances. So it being my second job, it was a higher tax bracket, which sucked.
Yes, it does. Well, no, with sole trader, it's you're essentially you don't pay any tax yourself. You just get a tax bill, generally speaking. Like they do recommend
Yes.
signing up for PAYG, which sort of going back to the tax story
That's
of mine where I had to pay the 3.5.
Yes.
The government wasn't happy that I wasn't paying any tax throughout
It's
the
what
year.
it's what you're supposed to do. If you're going to do a sole trader right, you're better off paying PAYG.
Yeah.
So that's pay as you go tax. So you're better off making installments continually throughout. What I used to do personally as a sole trader was I used to put a percentage aside, and I just used to leave that in an account. It can be really hard for people that aren't very good at budgeting because you could put that money aside and go, hey, look, I've got all this money for taxes. I've got all this money sitting there. Let's go spend it on a new car.
Yeah.
And then you come to the end of the financial year and you have a huge tax bill. And they're like, give us the money. And you're like, we don't have the money.
My story, exactly.
Then you have to go on a payment plan. There are options around it. Like you can go on payment plans for the next following year and you make repayments every single week, which is actually what I did one year because I did a bit of the thing about sole trader is you can be a bit more flexible. That's the thing that I liked. There's a lot more flexibility in being a sole trader in regards to, say, for example, the first year I did sole trader, I made sure I put the money aside. The second year I did sole trader, I actually used that money to put a deposit on my house to buy a house, a property. And then I went on to a payment plan with the ATO the following year. And so I slowly paid, although I did pay it off fairly fast, but I was able to get into the housing market because I then had the deposit that I was supposed to use for tax and I used it for a deposit on a house. So there is that sort of stuff.
Yeah, so that's when it comes to the installments, like you are able to do that, whereas company, you have to do quarterly reports. Like you have to. I think you got 28 days every 3 months to have it all in and done and dusted. Pete's going to talk more about that later because
and they chase you.
Yes, yeah, exactly. Whereas obviously sole traders and with your house as well, you'd be able to. Well, you were running your business out of it, so you'd be able to claim a portion of that on your tax deductions as well.
Yes, I am. Yeah, but that's a personal tax. You've got to remember this is different. Personal tax, when you become a proprietary limited company, you have to have that separation of personal tax and your business tax.
Yeah.
So even though there's the same, there's still, I have to get my personal tax return, then I've got to have a business tax return.
Yeah.
The difference with a sole trader is it's all in one.
Yeah, that's what I was referring to. When you were a sole trader and you bought the house with the money that you put aside. Were you sole trader when you had that, or was that your company, Pty LTD?
Yeah, I'd started the company by that point.
Yeah, okay. If you were a sole trader in that situation, then it'd be a little bit easier on that. Because how long did it take you to switch from sole trader? Like, what was the turnaround from sole trader to company? When did you decide to make the switch yourself?
8 or 9 months? 10 months? No,
8 or
longer.
9.
A year or 2.
And this was...
No. I started slow. So I took on 2 or 3 participants, and then as a sole trader, and I was still working, and then I got to the point where I had to hire somebody else, another sole trader. So I hired them to... Yeah, I probably went from sole trader to a company probably about 12 to 18 months.
Wow. So you're paying tax.
So, that was...
Through the wahoo. Huh? You were paying tax like out your ears for a whole year before you did that.
Yes, yeah.
Don't do that.
Yeah, so you pay a lot of tax.
Yeah.
You can do it. It worked out because I was able to. I didn't take an income first 6 months of me starting the company itself. When I had staff members, I would work to build up a cash reserve within the organisation to pay the staff that we were bringing on.
And with the changeover from sole trader to company, how long was it where you were solely doing support work? Because I know you were still working for another company whilst you were getting your company up and running. So what was that time frame? Because with your other company, they would have been paying some of your tax, which would offset your tax bill. So was that, you're counting the math. He's doing the math now.
I was probably working for another company while starting my own for 6 months. So, well, technically I had a company because I was a sole trader, because a sole trader is still a company. It's just not a proprietary limited company. So probably 6 months that I actually had the proprietary limited company while I was working for another organization. And like, they were aware that I was doing private work. I was very open and honest about all that sort of stuff. So then I made the transfer, which was an interesting transfer. It was a hard transfer, and it was an expensive transfer.
We'll talk about the expenses. It's a lot more expensive.
Yes, because an ABN is a personal ABN is free.
Yeah. Exactly.
Right, but as soon as you get into the legalities of, you've got to have a structure, you've got to have directors, you've got to have a whole range of different things. You've got to make sure your solicitors are on board, your accountants are on board. You've got to make sure all of that transfer. It ends up being thousands and thousands of dollars because you've got to increase your insurance. Funnily enough, insurance is the same for both proprietary limited and your sole trader, because insurance is based more on the industry that you're in and the actions that you're partaking in, rather than what type of company you are. It's all about risk. So it's the same insurance, but it becomes bigger because as you grow as an organization. I mean, very early on I made lots of mistakes within the organization, but you've got to surround yourself with people. So good accountants, good solicitors, good all that sort of thing. I didn't have very good accountants to start with. They did a few dodgy things. But the thing that starting a company, you still take the risk, right? But being an employee, when I was an employee at an organization, I didn't take any risk. As soon as you go from an employee at an organization to a sole trader, you start taking on a whole heap of risk. You're at risk for your clients suing you or not liking your work or not being able to get work. You've got to pay your own. So as a sole trader, you have to pay your own PAYG, or unless you do the other thing we said, which is put money aside, or get a big tax bill at the end of the year. You have to do your own super because there's no super contributions.
Yes.
They're not mandatory for sole traders. So if you could screw your future up real big time, as soon as you become an organization, a proprietary limited organization, you have to pay. There's compulsory super contributions, which have been steadily going up. So there's the super contributions that happen, which doesn't happen as you're a sole trader, which can affect you in the long term. Like I have an employee that works for me that was a sole trader for many, many years in the construction industry, like 20 odd years in the construction industry, and he never paid himself super. And so now he's
20 years. Wow.
Why would you touch it?
I didn't. I was moving the light. Sorry. Did I move the camera?
Okay. 20 years. Yeah, it's okay. 20 years. So why would you? So he didn't put anything into his superannuation accounts, which means now he doesn't have much in his super, and he's coming up to retirement, and they're getting rid of the old pension system and things like that. So there's a big risk there as well. Yeah.
What? We're going to circle back to the pension thing. I didn't even know that. Am I surprised? A little bit, but then not really. Because the 20 years without being
and so
super. The amount of
so it was a long time.
The amount of losses he's incurred just.
So I'll give you a couple of things about, say, for example, going on liability. So as a sole trader, the liability is not limited, right? So loans provided to sole traders will generally be secured by a sole trader's personal assets. So that'll look like your house, your car, and different things like that. And that can, sometimes include the family home, and that's the way you end up having to get a loan, is by securing it through something. Because banks, you can't just go, hey, I've got this awesome idea. They're not going to give you money for an awesome idea, right? They want to make sure that you can pay that loan off. Whereas one of the major advantages of having a company is that the company, which is limited because it's a proprietary limited company, is the restriction regarding liability, right? So for the most part, if a company goes into debt, creditors cannot recover debt from the directors unless they have given the green light for a company to continue trading after insolvency.
Yeah.
That's a whole nother topic about trading under insolvency. But it means that majority of the time, the directors and the owners themselves are actually covered and protected. There's a barrier there. Same with the shareholders. Right, so the shareholders' liability is zero. So that comes back down to how you're structuring your organization, right? So for my organization, I'm a director and a shareholder, right? So I've got a protection, but I've also set my company up in a trust, which means I've got another barrier as well for protection on liability, right? Whereas with a sole trader, you just don't have that, right? And you've got to be prepared for that, which means you've got to have insurances, you've got to have all this extra stuff in place as a sole trader that you may not need.
On that, what roughly is the cost to transfer to a company? There's a few different numbers out there, but what did it roughly cost you? So what is that?
Oh, it just keeps changing. So to corporate, it's probably, you're looking at about, it depends on the accountant you go through. You're looking at maybe a trust is going to cost you maybe $1,500 to build a trust, which you'll put the company in. You need ASIC registration, which is about $260 something a year. You need the business registration. You need the company setup, structure and cost and fees, which comes from a solicitor, which is usually organized by your accountant. So that's, you're probably roughly looking between the $4,000 and the $8,000 kind of mark just to go from a sole trader into a company. But you've got to do your math, you've got to do your research, your history, your experience, because you've got to go from just yourself working as an employee, then you've got to have standard operating procedures, policies and procedures, a lot of stuff that you should have as a sole trader that people just don't have because they're like, it's just me, whatever. Oh, here's another big thing. As a sole trader, same as if you own a company, is you need to have life insurance. Just get on life insurance because what happens if you die? Like, there's no guaranteed income. Also, income protection is the other thing you really need as a sole trader and both a director or a company owner.
I might have to look into that. So, life insurance and income protection.
Income protection.
Well, what is it going to entail then? Like, will you have to then supply your previous tax statements, or like, because
there's not much to supply for that sort of thing.
Is this sole trader or?
No, sole trader, and I have to have it as well. So work cover does not cover you if you're a sole trader or a owner or director of an organization. Okay. So yeah, you really need to make sure that you get into all that, because at the end of the day, when you're, it's not like you're working for a company. When you work for a company and you injure yourself, there's work cover. Yeah. Work cover will cover a percentage of your income. You're very well aware of this with your partner, who's just gone through a whole work cover situation.
It's not fun. You don't want to do it. It sucks. I mean, it's good. It's good to have.
But if you're personal and you, work cover is great, but if you don't have work, like as in, yes, it's hard, but at least you get stuff. Whereas if it's just you get nothing.
Which makes it difficult.
So that's what's really scary. I think going back on the difference between the two as well is you're looking at the difference between sole trader and a proprietary limited company. Going back on liability is security for your loans and stuff as well. So we sort of talked about it with liability, and if the company goes bankrupt and you have debtors and all this sort of stuff, then you have to pay that back. Or if someone tries to sue you and all of that sort of thing. Any of the loans, particularly, so the loan side of that, any of the loans, particularly if you're a sole trader, have to be secured by you.
Yes, yeah. I have a story
right,
about that.
So there's. Did you want to share the story?
Oh, it's not a big story, but like I know that's definitely a matter, because when me and Heather, we did the math probably about a year or two ago, and like we can definitely afford to get a second car, a ute, which would be a work ute, because the thing with a lot of sole traders is like you can claim car mileage, car purchases, but generally speaking, for a sole trader, it has to be a 1.5 ton minimum, like towing capacity ute or van. And so I know.
Oh, that's for companies as well, not just sole traders.
Oh, there you go. So we knew we could afford it.
Otherwise, you have to pay FBT.
Yeah, which I don't have to deal with at the moment, which is great. We tried to do it. We already did the math. Like, we're making, an extra $300 a week already, which would cover any repayments, fuel, maintenance, etc. And then as soon as they're like, oh, we'll do it through a business loan because obviously that makes more sense. Business loan, business car. I would have used it for fencing, farm work, everything like that. And they're like, oh, have you got any assets? And like, because I went through like assets, and then they called me up and like, hey, do you have a house at all? And I'm just like, no. And so it's just like you need high valued assets for any sort of a business loan, and that especially as a sole trader.
Yes.
Because it's like, as Pete said, it comes back on your personal assets, not your business assets and income. So that's my story.
Yes.
It sucks.
Yeah, so it does make it hard. Whereas within a company, the company can get a loan secured by its assets. So as you build, so that can be in the form of cash assets, that can be in the form of equipment, that can be in the form of property, all of that sort of thing as well. Having said that, as a proprietary limited company, as you're starting up, it can still, some bank may require personal guarantees from the directors or the owners of the business. So that can still come into play. But there's just a lot more protections in place once you are a company and you're getting business loans themselves. The other thing about the difference between sole traders and a proprietary limited company is the ability to build investment and capital raising. As a sole trader, you're not able to do that because you don't have shares within the organization. Whereas as a proprietary limited company, when you set your company structure a number of shares, and then you can actually sell off those shares to people that are really interested in your organization. And you sort of set an amount, and then that sort of dictates how much the company is worth and different things like that. So it makes it a lot easier to raise capital, especially if you're doing say some big projects, like for example, if you're doing property development, different things like that. If you've got some awesome property development ideas and you've already got some stuff in place, you can get other property developers to invest. Shark Tank is a perfect example of this. They sell shares to the sharks at a number.
Yeah. Because have you got shares?
What is interesting?
Have you got shares for your company?
Yes. Yeah.
Obviously,
you have to have shares.
Right. Gotcha. And it's obviously on the private
there's options.
market.
You can have. Yes, you can have single shares. No, well, it depends. It depends on who owns the shares.
Okay.
Right. So, as in, I own all the shares. Right. Well, actually, I don't. The company, let me get this right. The trust owns the shares, and the trustee is being changed. So, which is another shelf corporation that we've created in order to do another level of protection.
Yeah.
That's a whole nother story that I'm still trying to wrap my head around. So you can do a company that's really easy. You can go, there's 120 shares.
Yeah.
Right. Or you can do, we're a company with one share and the company can never be split.
Yeah.
That's a silly way to go. Don't do that. Always go with with an easy round number. 120 shares is a good number. Just in case things happen in the future or you decide to go public or a whole range of different things. I think a lot of people will be really interested in this next one. Is one of my favorite reasons for having a company is tax.
Yeah, tax. Gross.
Okay, so Dan and I have had lots of conversations about this tax. So companies pay a standard corporate tax rate of 30%.
Yeah.
Right? Whereas if you're a sole trader, if you earn over $100,000 a year, you're going to be up at a higher tax bracket.
Yeah.
Right? So this comes down to, Dan always talks about this when he mentioned before, when is the best time to become a proprietary limited company over a sole trader, can usually be based on your income and potential growth within your business. Yeah. So if you continue to have new clients come in, it's building up more and more. This is what happened to us. I started pushing higher and higher into higher tax brackets, and I started going, all right, I need to stop. I need to look at what's the best opportunity, and then go, all right, it's now better to build it as a company because I'm going to pay 30% tax rather than paying 42% tax.
Yeah. Yeah, it's
for being in a
disgusting.
higher tax
Yeah.
bracket.
So you're only going to have to, to break down the tax brackets, if you're not aware, if you're doing any sort of sole trading, you should definitely be aware of the tax brackets. So I think to break it down, we should have touched on this
Yes.
last episode, is 0 to 18,200 is 0% tax. 18,200 to 45 grand. 19 cents of every dollar you earn has to go to tax. And then the next tax bracket is 45 to 120. Or might be 180. I think it's 120. That's when you're pushing 32.5%. And then
Yeah, but okay, so we've got to be clear on Australia's tax system. So we're not all your money is taxed at 32. So every dollar
yes.
over 45 is taxed at 32%.
Yes. Good call. Yeah.
So, because it still makes sense if you get a higher paying job to get more, because you're not going to earn less just because you're in a higher paying job.
Yeah, exactly. That's the point.
So big tip is, well, Dan should know the tax brackets because Dan's a sole trader.
Got them. I just pulled them up to get the right numbers. I was pretty spot on, just by the way. So going back to the tax brackets, so your tax bracket from 18,200 to 45 is about $5,000 worth of tax that you're going to have to pay. So if you earn 45 on the dot, after your deductions and everything else, you're going to have to pay about $5,000 worth of taxes. So then that stays there, and then any money after the 45 up to $120,000, you have to pay 32.5% on the remaining. So the 45 to the 120.
So just at that, if you look at the percentage wise, if you're a company, you only pay 30%.
Yeah.
Whereas a sole trader pays 32%.
Yeah, it makes sense to, as soon as you clock over 45, because at the moment I think I'm currently sitting, even Heather, she cracked into the 50s this year, last financial year. So we're right on the edge of that 32.5. So we're not losing too much.
That's still okay.
Yeah, that's what I was going to say.
See, that's still okay. It's when GST gets involved as well, though. So GST is goods and services tax, which you have to pay over. So that's an extra 10% when you have to pay over 80,000. When you earn over 80,000 a year,
75 grand.
70 used to be 80.
Yeah, back in the day, 3 years ago. Not back in the day, 3 years ago.
So once you earn over 80, then you have to pay an extra 10% on top, which is, so that's usually when people start looking at going, all right, maybe it's better that I'm a company because then I have a lower tax bracket.
Yeah.
Still have to pay GST, but I'm still losing a couple of percentage.
And going on that as well, I think if your deductions clock you under 75, so that's the other thing. If you're doing quarterly, the bonus of doing quarterly is you know how much you can deduct from your grossly income for that quarter, which means I'm assuming, because they work your tax and the GST off the gross, unless I'm wrong, that if you earn, say, 85 to 90 grand, one, you probably want to be registered for GSE just to cover you. However, you should, I know with me, I would definitely be able to do about 15 grand worth of deductions on that, because at the moment I'm able to do about 12 with just my business at the moment is a lot of driving, so a lot of car expenses, because fuel is ridiculously expensive. So there is that. And so I know for me personally, when I would switch to a company would be when my deductions are no longer going to drop me towards, probably if my deductions were over 60, I would be thinking about switching to even so gross after deductions. I would probably, if it was clocking over 60, I'd be thinking about switching to a company.
Yeah.
In my personal opinion.
See, what's interesting about that too is because, if you talk about retained profits though as well, as a sole trader, you actually technically can't retain any profits, right? So profits of a sole trader will always be taxed at the personal marginal rate, right? Whereas a company is able to, they're not required to issue anything to any profits to their shareholders, right? So there's no legal obligation to do that, right? And they can use the profits to facilitate growth within the business, right? So if I, say for example, if I get 200K of profit in and I use 150K of that profit to develop the business further in advertising and this and that and a whole range of different things and further the business, buy assets, different things like that. That's not counted that's not taxed at, right? So we're able to then retain the profits. So then whatever profits are left over are then taxed as income for the for the company.
Yeah.
Sorry.
Gotcha.
So there's a slight difference there. Also, going into like tax losses, sole traders have the ability themselves to offset any losses from one source of assessable income to another. For example, any losses incurred in regards to like rental properties or different things like that can be offset against any income from the business of a sole trader. And that's similar to how companies that have multiple businesses can offset any losses from one of the entities against the income of another entity, which is this is something you want to get into further discussions about with your tax accountant.
Definitely.
With your tax agent, because it starts getting a little bit messy. Like companies that form part of the same consolidated tax group, the situation is similar in that the losses can be offset against other sources of income in the submission of the group's return. So they can sort of move money to different organizations in order to offset the amount of tax that they're paying percentage-wise, which is why you have things like shelf companies and all of that sort of thing as well.
Yeah, and that's also goes into the whole, if you're a serial entrepreneur and you have multiple forms of income, that will be very beneficial for you. So if you're getting to a stage where, like, because some people, they just want to do their one business, like, I'm happy earning, 80 to 90 grand for the business, pay my tax, do that. But those that are sort of continuing to grow and their income's increasing, profits are increasing, that's when more than likely there's going to be more than one business, and then therefore stream of income, which will then be able to offset any of your tax expenses, which will be handy for those that are all that way inclined. Because it's not for everyone at the end of the day, like doing multiple businesses. And because you were saying on the phone that each trust, because we can get into trusts if you want, because you've got 3 now. Is that correct? Or 2 or 3?
Yeah. Two. But I keep changing them, so.
Yeah. So there's benefits to having everything through a trust as well. I'm going to give that to Pete to explain because I barely know it. Because I think I contemplated doing a trust and it just didn't make any sense with the costs to set it up and maintain it as well. It's just didn't make sense for what it was earning.
Maintaining it's not expensive. Maintaining it's only $260 something a year for ASIC registration, so it's not expensive.
Gotcha.
You're better off. You're not doing it as a sole trader. You do it as a company. It's just an extra form, so it's not Jess and myself owning all of the shares within the organization. It's actually a trust that owns the shares. So if something goes wrong with the business, they go for the trust. They can't actually touch us as the organization owners. Well, they can, but it's a lot more difficult. All you're trying to do is just put blockades in front of yourself. So we're shifting it so that we're putting a shelf company as the trustee of the trusts, and the company, so the company directors are myself and Jess, right? So what you've got a company. All the shares for the company are owned by the trust, and the trustee who manages that trust is another company. This other company then has the directors of myself and Jess.
Yep.
So they have to go through, the company. All right, let's get what we can. All right, let's go to the trust. Oh, the trust is the trustees, which is this company. Now we have to deal with this company. And then it's...
A lot of paperwork per trust. There's no one's going to want to do that. They're like, no.
Yes.
And generally, if they're trying to go for you that hard, they're probably in the wrong. So they're going to lose. Like if they're just trying to...
Or in the right.
You'd have to be doing something real dodgy for that to be the case, though. If they go through 2 different trusts, so basically firewalls, to get to your personal assets.
You normally only have 1 trust. You don't have 2 trusts. It starts looking dodgy. If you have multiple trusts, it starts looking like you're doing something wrong.
Gotcha.
So
here's Pete saying, I've got 2 at the moment.
Well, no, I have 1 personally for property trust, and I have 1 for company.
Yeah.
So that's why I have 2 trusts, because I have 2 asset protections.
Yeah.
So each individual asset protection, I'll put properties into the property trust, and the businesses will go into the family trust.
That's what I was going to say. Like, would you?
You've got those
your different forms of income, would that?
You separate.
Yeah. So if you've got like this business has a trust, and then this separate business has a trust, and then this business has a trust.
Oh, maybe not. I might. So because I might do multiple businesses that might all be under the same trust.
Okay.
And just because it makes it easier for everything to be for asset consolidation and all of that sort of stuff, it's easier for it to all be in the one place.
Would that be one of the main benefits?
What's funny though?
Would that be one of the main benefits for keeping most of your things, like you have a trust and then you've got like a sole, like a big trust that kind of branches into others? Is that benefit mainly ease of tax time?
Yes, that would be the benefit. Yeah. Yes, because once you've got to remember what trust is what and which trust is where, and it's funny because when we did our trusts, we paid all this money to get the trusts, and you get this stupid little A4 piece of paper that tells you, or that you get this trust deed, and I'm like, man, it looks like a 12-year-old wrote this on Microsoft Word.
Oh, that's great. Oh, it's probably a template. It's just
like copy and paste.
It's probably a template on Microsoft Word. They're like, oh yeah, we got this trust. Yeah, that's it. We'll just fill in the details.
So it's just. Yeah, so it's pretty ridiculous, but you need to do amendments and all that has to go through solicitors. And so one of the big things though with going from a sole trader to a company, when you decide to become a company, that means your intention is to start hiring employees, right? The scary thing about that is you do have to have more regulations, and there's more people watching you. You've got the Consumer Act that's watching you too. More so when you're a sole trader, it's more the Fair Trade Act, sorry, which is keeping an eye on you. But then you've got the consumer, then you've got to start organising work cover and making sure fair work and the ombudsman. So it actually becomes more. So when you're a sole trader, you can decide how much you want to pay yourself, right? So if you decide to pay yourself less to make sure your company is going to survive, then you can do that. Whereas if you become a company, you have to start paying employees at the ombudsman rate, at the fair work rate. So that's all pre-dictated to you, but you have to do your research. You have to keep on top of it. You have to keep on top of legislation changes, rules, restrictions in regards to staffing options and having workers or having employees within the organization. And then you've got to make sure you're paying under the right pay scale, and that can change depending on if they're admin or if they're this or if they're that, and everything just makes it hard. So
I know when it comes to staffing per se, I guess it'd be more subcontracting is one way sole traders can almost get around it. But then if you're subcontracting out to half a dozen different subcontractors, so you've got a subcontractor that covers your bookkeeping and tax, you got one that actually does some services for you. Like, I believe if they've got their own ABN, you're just paying someone to do something for you, but it's just for the company.
You have to be really careful because the subcontractor laws have just changed.
Oh, have
so
they?
If you're using a subcontractor on a regular, well, I don't know,
actually,
just changed.
You mentioned this a while ago. You did mention this a while ago,
Yes, if you're paying them on a regular basis, right, now Fair Work sees them as employees. Right, so if you're subcontracting to someone and they have the same hours every single week, and they're getting paid a regular pay,
it's a bit dodgy.
Then they're classified as an employee, which means you owe them superannuation,
tax.
You need to pay work cover, do their taxes, all that crap.
Would be leave loading as well. Surely not.
What else is really interesting is
leave loading.
It depends on if they're, that'd be casual. But here's the really crazy thing. Casual laws have changed too. So if casuals have regular hours, then they also have to be put onto contract within a year or after a year. Unless they continue to sign a casual contract. That's your way around it. Get them to sign a casual contract every year.
Or just change their starting time.
The second thing is, if you have somebody on, say, permanent part-time, right, and you've got them guaranteed 14 hours a week, if they work 32 hours a week, every week, then for, I think it's the space of 6 months or a year, if they do the same amount of hours every week, their permanent part-time contract has to be increased to 32 hours a week.
Oh, wow. That's good to know.
Yep.
Which
sucks. So this is all the stuff you have to start working with. Companies become complicated. Like, that's why you don't do what I did and make a company very fast and go explode very quickly. You normally go, I'll create a company, and then we'll create one employee, and then we'll do another employee, and then we'll do another employee.
It doesn't work. And that also...
Whereas I was like, hey, let's start a company, and I hired 7 people.
Yeah, so good. And that also comes back to, like, when you start a company, you need to be looking at getting yourself a legal team, because as your company grows, you're more than likely going to upset 1 or 2 people, which you then have to cover yourself. And then it comes back to also contracts for your employees, as Pete was saying, writing those up, and then any sort of copyright, trademark, like any of that stuff, you need a legal team to be able to just write up the correct forms so that it's by the book, and that you can't, if you get audited, you're like, this isn't correct. Wow, that's not fun. I now have to fix this. It could be quite costly.
To be honest, I look back and I go, it would be easier to go back and be a sole trader.
Yeah.
But the potential for growth is more within a proprietary limited company.
And then what's your earning, though?
So how much do you want to push yourself?
And then how much you're earning, though? Like, if you're earning over, like, 6 figures, like, that's a lot, like closer to 7. You're already going to be paying half of that basically to tax. There's no way you're going to be able to do 500 grand worth of deductions. Like, that's dodgy. I mean,
as a sole trader?
As a sole trader, I'm like, you'd be silly, surely. I mean, I'm sure there's some people that do it.
No, but you wouldn't do that. As a sole trader, you'd keep your income lower because you don't need to live on $500,000 a year. That's not what the heck? That's an intense quality of life if you're spending that much money.
Yeah, that's
like, I'd rather have asset built rather than but you can do more voluntary super contributions as a sole trader.
Yeah, that's true.
So you can voluntary contribute up to $25,000 a year.
I think it might be 27.5. Now they've changed it.
It was 25,000.
Yeah, I think they've only just recently changed it. I was listening to YouTube fella.
And that's tax free.
Yes. And then also the other thing with having a trust is if you do have stocks or something where you sell within a year, you get a 50% discount on capital gains tax as well if you've done it through the trust.
Yeah.
I did see that. So that is a little bonus there for any.
So you did know a little bit about trusts.
I did some research. I did. I'm just like that is a benefit of having a trust, is if you do dealings with, like, even probably, I imagine, real estate, stocks, anytime. So if you're flipping houses, for example, if you do it through a trust, you'd be getting a 50% discount on capital gains tax, which is considerable.
Yes.
Considerable. Yes.
Yeah. I mean, if you have any, like, the real thing to say in all this is if you have any questions, like if we've piqued your interest on anything, then go and talk to your accountant.
Yeah.
Because if you're a sole trader, you should already have an accountant.
Yes, exactly.
And if you don't have an accountant, I say this, I feel like I say it every week.
We pretty much do. We're now the tax podcast. In all fairness, tax is very much a very big thing in any business because that's how you stay out of trouble, basically.
Yes.
It's a big part.
So it is interesting. So there's a couple of things to think about. Like, running a sole trader company is easier.
Definitely.
There's not as much to do. Running a proprietary limited company is going to cost you more money, but you have more, and it's going to take more time and more effort, but you've got more potential for growth.
Yeah.
So you sort of have to weigh up those options. For some people, being a sole trader is the best thing in the world, and just they can be a sole trader for the rest of their lives. That works. Yeah. Like some Sparkies that I know are sole traders, and all they do is it's just them, and they go to people's houses, do their job, go home. That's it, right? But if you want to see your business grow, develop, become bigger, become better, become something larger than just yourself, then you have to. If you've got the dream to not just it's not the money, right? No. Because I earn less now than when I was a sole trader, right? Yeah. It's not about the money, it's about making a difference. Yeah. So if you're passionate about the industry that you're in and you're passionate about seeing change, then probably look at becoming a proprietary limited company, because you can impact the industry more. You can change the industry more by being an actual company itself rather than just being a sole trader. Because there's only so much you can do by yourself.
Exactly.
But the world is your oyster when you can hire people.
Guess what's going out the intro?
But don't.
That little snippet cut. Intro.
That's right. Oh, did you like that?
It was good. It was like some deep, meaningful, motivational speech going on there. Make a difference, guys.
That can be
You've got this.
That could be a snippet that goes onto like Instagram or something.
Yeah, it probably will. It probably will be via TikTok. Do all that.
And then we just need to share it 1,000 times.
Yeah.
So yeah, that's the thing. You just need to look at a place, make a difference, change the industry that you're in. If you're passionate about it, it's going to make a huge difference. It's all about passion and drive. At the end of the day, majority of business owners don't make a heap of money, right? Like majority of business owners earn less than you would expect, right? Proprietary limited business owners, so companies, right? Sole traders still make a very, very good income. If that's what you're after, stay a sole trader. If all you're wanting is an income, stay a sole trader. If you want to make a huge difference within your personal industry and you're growing and you want to develop and you want to have the stress, you may lose income. It may grow back in the future, and you may get a larger and larger income as the business grows, but that's not going to happen for many, many years. Like majority of businesses fail. I think it's 80% of businesses fail within the first 5 years, right? Exactly. Companies fail within the first 5 years. So if you've got stable income coming in from a sole trader gig and it's working, stick at it.
Exactly.
But if you do, like I said, make a difference, change the industry you're in, change people's lives, but you're going to have to be happy with decreasing your income, then go for it. Start a company. It's going to be a hard slog. You're going to be passionate about it, and you're going to push for change within your industry.
Yeah, exactly. And I mean, that's not to say you have to stick to one industry as well. Like, you can have many passions and many businesses in those passions. Like, I guess at the end of the day, once you've done it once, more or less, rinse and repeat on different businesses, depending obviously on how you set it up. But if you set it up properly, one, you've got the contacts there already from your previous one. Like, we've just got this other business we want to tack on. 2, you know what to avoid, what pitfalls that could potentially arise. 3, you're going to be able to, I guess, grow faster. So instead of you taking, 18 to 24 months to get some consistent profits from your company, you can be like, well, this is what we need to work on, like tick this, work on a checklist, and then bang it out and like pretty much copy paste to another.
All right.
Alrighty, guys, if that is all for this week, if you enjoyed this episode, make sure you like, share, subscribe, bell, all that fun stuff. Last episode will be on the screen somewhere. We'll be doing it every 2 weeks. There'll be an episode every 2 weeks. There may be a bonus one every now and again. We hope you enjoyed it. If you do have any questions regarding switching to a company or staying sole trader, one, you can ask us. We're not going to give you a qualified advice or answer. We will probably recommend you go to see your tax accountant because they will have a better idea of your circumstances. Everyone's circumstances are different. This is not advice. This is just our experience and opinions. But until
this is just funsies.
Yeah, until next time, guys, enjoy your week, and we will see you back here in 2 weeks. Thanks.